Hello, you are watching a recording of an urban agriculture workshop, led by the United States Department of Agriculture's Farm Service Agency in St. Louis and the University of Missouri Extension. This session covered keys to success when applying for FSA loans, as well as an overview of various farm loan programs, a producer success story and tips on farm financial records. You can use the video's chapter feature to find key sections of interest. All contact information can be found in the video's description.
Okay, so at the local level, with USDA, we have an urban service center. We opened that up about a year ago. We're located on Page Avenue. It's in the Overland neighborhood. Within that service center, we have Natural Resources Conservation Service. Sarah Szachnieski and Elisa Moss are your contacts there. They can talk to you about cost share programs as well as technical assistance. We also have Farm Service Agency, which myself, I cover farm loan programs, and then Heather also works for Farm Service Agency. She would be your contact for obtaining a farm number, completing an acreage report, as well as cost share programs. Within FSA, we also have our Urban County Committee. This is a board of elected local producers that are in the area. And we also have a cooperative agreement with MU Extension. Manita Ale is our contact there, and she can help provide technical assistance as well as business planning assistance. Right, this is kind of a guide to becoming ready to apply for an FSA loan. So there are some steps that need to be done before we get to that process of submitting an application. So the first thing that we like people to do is identify their goals. We want you to look at what are your short-term goals and long-term goals for the farm. The second thing would be to build a network. We recommend that you talk to producers in the area, as well as people that are already in the same type of farming operation that you're wanting to get into. There's a lot of lessons that can be learned that maybe someone else has experience in terms of their pitfalls and successes in starting an operation. And I've also listed industry professionals there, which would include staff at MU Extension or even Lincoln Extension and USDA as well. The third step would be to research the programs that are available. So this could be grant programs, cost share assistance programs available through either federal, state, or local organizations. The next step would be coming up with a business plan. Again, as I mentioned earlier, we've partnered with MU Extension for creating business plans, so they are readily available to help you with that, and they have an understanding of how the loan application process works with FSA. And then lastly, once you have done the prior steps, would be to go ahead and proceed with the application process and contact FSA. Okay, so just some general tips on how to make your application process go smoother. I mentioned making a business plan, and I want to go over why that is important. If you have a well thought out business plan, this is definitely critical in the startup phase. You want to have a roadmap of where you're heading and how you're going to get there. Even after you've been in business for a while, this still serves as an excellent guide and reminder for you as a producer when you make future decisions. An example would be, let's say you come across an opportunity to purchase additional farm real estate, or maybe you're looking at buying a specific piece of equipment to upgrade what you have. This is a good way to go back and revisit that business plan and make sure that that fits within your overall goals. Having a business plan also allows the lender to gain a deeper understanding of how you structure your business and the goals that you have for your farm. And I think this is applicable to any type of business structure, whether you're a nonprofit or you have an LLC or you operate as an individual. We also like that you maintain financial and production records. Obviously, you wouldn't have this if you're just a startup business, but once you get in business, this is good practice to keep those. Keeping records allows you to identify strengths and weaknesses. Knowing your expenses is very important. You need to be able to analyze where your money is going and where those expenses are. We also want you to utilize a system that works best for you. So if you are, somebody that does not prefer to do things online or on a computer, maybe a paper-based system is more suitable to you, like using something like a notebook. If you like using electronic-based system, there are multiple software programs you can use. QuickBooks is a very popular one, and you can also use something like an Excel spreadsheet, which is very inexpensive, and you can customize that. I want you to file a farm tax return, which is a Schedule F, to show that you have the operating history. This allows a lender to assess the viability of what you are proposing with a loan request. So overall, records make the loan application process smoother. Okay, so why choose FSA loans? The first thing would be affordability. Generally, they're a fraction of what commercial interest rates are. We do have some real estate loan programs that go as low as 1.5%. These are fixed interest rates, so once you are approved or we close the loan, the rate is locked in for the term of the loan. Also, most of our loan programs do not require a down payment. Most lenders, if you go to a commercial bank, are looking for 20 to 30% when you get into commercial real estate. FSA also wants to be the lender of first opportunity for you. So we are here for folks that cannot obtain credit through a commercial lender. Generally, this has not been an issue in terms of people meeting the eligibility requirement, because we have current market rates that are anywhere from 8 to 9% on farm real estate. So most people are having a tough time making that cash flow when they're wanting to purchase a new farm. So, and just to clarify, you do not need a turn down letter from a bank or a rejection letter. We can typically make that determination in-house to ensure that, you know, you would not be eligible for commercial credit. And lastly, we have priority funding. We have portion of the FSA loan fund set aside each year for historically underserved producers. So when we have the general funding pool that runs out of money, there are those funds that are set aside for those specific groups. Okay, so just an overview, we've got two main categories on the loans. We have direct loans, which are loans that FSA makes directly to the farmer. So those funds come from the federal government. This includes the farm ownership loans, micro loans, and joint financing loans. We also have guaranteed loans, which are loans that are made to you by a USDA approved traditional or commercial lender with the backing of FSA. So that is essentially a government backed loan. And the bank is willing to do that because it makes it less risky because they have that government backing. With guaranteed loans, we typically see those for larger loan requests and refinancing requests. We won't focus too much on that today because I want to focus more on the micro loans and real estate loans that would be applicable to urban farmers. So within micro loans, we have the operating loans and the farm ownership loans. You can have up to $50,000 in each category. On the operating loans, this can be used to purchase things like equipment, make minor improvements to real estate, and cover recurring operating costs. We can do a term up to 7 years, and the current rate is 5%. This is the most popular one out of the two microloan programs because we usually see these requests for smaller equipment items. The micro farm ownership loan program also goes up to $50,000. We can use it to purchase farm real estate, make capital improvements, and cover loan closing costs. And we can do a term up to 40 years on that. The current rate is 5.375%. Okay, so the advantages of microloans versus doing a direct loan program, there are less application requirements, so less paperwork for you to submit, and we also have less security requirements. With microloans, we are typically only taking a lien or security on the items that we're purchasing with the loan proceeds. There are some exceptions to this, such as if we are financing livestock, because those aren't considered separate and identifiable. We would have a lien typically on what you purchase as well as anything you already own regarding livestock. The direct farm ownership loans, we have 3 different ones that I want to focus on here. The 100% loan, we can go up to $600,000. This can be used to purchase farm real estate, capital improvements, and cover loan closing costs. That's a term of up to 40 years. The interest rate right now is 5.375%. And then moving on, we have the down payment loan, which is also called the 50-45-5 loan. Some people also call this the beginning farmer loan, but it can also be made to historically underserved producers as well, not just beginning farmers. So that one, you can go up to $667,000 on a total land purchase. You would get a private commercial lender involved where they would loan 50% of that, and then FSA would loan 45% of the purchase price. FSA can only loan up to a maximum of $300,150 on that. And it does require a 5% down payment. This is a really good program because you do get an interest rate that's fixed of 1.5%. The bank does determine their rate on their portion of the loan, but it does help offset the bank's interest rate significantly. Another advantage with this program is that we only take a lien on the farm that we are purchasing. So with the other farm ownership loan programs, we do take additional security if it's available. It's not a requirement that you have to have additional security, but if you already own a personal residence or maybe another piece of property, we would consider that as collateral for the loan on those other loan programs. And lastly, we have the 50-50 participation loan. It's also called a joint financing loan. So we can go up to 1.2 million on the total purchase price. The bank, again, would loan 50%. FSA would loan 50% up to $600,000. We can use this to purchase farm real estate, capital improvements, and cover loan closing costs. And that's a term of up to 40 years on FSA side. The interest rate, a little bit different on this one. It's at 3.375%, which is still lower than the regular farm ownership rate. And then, of course, the bank determines their interest rate for their portion of the loan. Okay, so a couple other items to touch on the direct farm ownership loans. For farm real estate purchases, you do have to have a sales contract. We do not do any kind of pre-approval, so it is property specific, and the loan official will take a look at what your plan is for that specific piece of property that you are wanting us to finance. You do have to have 3 years of farm managerial experience. We have a long list of substitutions that can qualify somebody with similar experience. So please don't let that deter you from applying or thinking that you may not be eligible. Definitely talk to FSA and we'll kind of go through that on a case-by-case basis. Okay, so if we're approved for a loan and we've closed, what to expect? We have annual installments. We also do periodic farm visits for the term of the loan. And we ask that you maintain insurance on all collateral for the loan and maintain production and financial records. We also want you to have open communication with the FSA loan staff, and please let us know if you have any major changes planned to the operation once you've closed the loan. I put on here, we also want to share in your success as well. One of my favorite parts of the job is being able to go out and do farm visits after we've closed a loan and somebody's been in operation for a few years or even later down the road, and it's really exciting to see the progress that they've made with the farm that we were able to finance, or livestock or equipment that help them expand their operation. Okay, so the last thing I want to share is our loan assistance tool. So this is an online resource that provides more information on the loan programs and the eligibility requirements. I definitely recommend that you take some time and check this out, especially before you contact FSA and have that initial conversation. It just helps prepare you a little bit better to have the conversation with FSA. It's definitely not meant to be a replacement of, talking to somebody one-on-one. So, but I encourage you, please reach out to me if you have questions. I'm very flexible in terms of meeting you where you're at. I can come out to your farm. I've also met people at libraries. You don't have to come to the USDA office. We'll kind of make it work for whatever's convenient for you.
Hi, everyone. First of all, my name is Heather Habinyak. I am the Urban Agriculture Program Technician in St. Louis City. And I work for FSA, the Farm Service Agency, on the program side. So Callie works on the loan side. I work on the program side, but confusingly enough, program side also has loans. So one of the loans that we offer that would be useful for urban or small scale diversified farming is the farm storage facility loan. Originally, or historically, the farm storage facility loan was used for grain bins, for row croppers. But now that there's more emphasis on urban ag, this program has really evolved. And it can be used for a lot of different, handling equipment and structures. So yeah, the farm storage facility loan is meant to be used for structures and handling equipment, a commodity after harvest. So this loan program cannot be used for structures like greenhouses or hatcheries in which you're still growing or producing your product. But it can be used for things like washing equipment, for if you need to wash your greens, drying equipment if you wanted to dry herbs, or garlic, packing equipment, storing, and moving your commodities. To qualify for an FSFL, you have to grow or produce your own commodity. So you have to be the keeper of your bees, for instance, if you want to take out a loan to buy a new piece of equipment. You have to be the person who grows your fruits and vegetables. The second requirement for a farm storage facility loan is that you need to show the need for your storage. And if you take out a microloan for a farm storage facility loan, which is any loan below $50,000, you can self-certify this storage need by doing some math calculations that I could help you with. And then next, you have to have acceptable credit rating and have a financial analysis, essentially to prove that you can pay back the loan. And you can't be delinquent on any federal non-tax debt. So I don't know who all is in the audience. I don't know what scale you guys are at right now. So some of these pictures might look a little daunting to you. You might not be at the phase in your farming operation to buy a big walk-in cooler, but you could still potentially benefit from having a cooler, a freezer that is a little bit smaller scale. So this program is really flexible and it can be used for a lot of different things. I'll give you some examples. Up here, there's a paneled van. You might use that to help transport your produce to a farmer's market. Over here is a machine to help you jar your honey, a walk-in cooler, as I said. Solar panels or electrical utilities can be used if they are contributing to the storage facility that your commodities are being stored in. So yes, and this program is really flexible. If you have an idea for some equipment that you need to help you handle, dry, wash your products after you've harvested them, I'd encourage you to come and talk to me about it, because there is room for new equipment to be approved through this program. So please come talk to me if you're interested. The farm storage facility loans have varying term lengths. It depends on what you buy, how much, or what you want to buy and how much that will cost. The term lengths can range from 3 to 12 years, and the interest rate is locked in for the term of the loan. So just like FSA loan side, our interest rates change monthly, and they are much lower than commercial loans would be. So right now for an FSFL, they're ranging between 3.8% and 4.12%. That is subject to change for March. One caveat to the farm storage facility loan is that traditionally you upfront the costs, and then the farm storage facility loan reimburses you after you submit your paid invoices. This can be done in one lump sum after you've paid for everything, or it can be split up into 2 installments. So you get one installment halfway through and the last one at the end. And there's some wiggle room in that, perhaps. So if on a, personal basis or in your situation, maybe we can work with you and the person that you're buying your equipment from or your facility from, to accommodate your situation. So what to expect from the farm storage facility loans? It's very similar to what Kallie said with her loans. So you get your installments, there are site inspections. You have to use your equipment or the storage facility for what you use in your needs determination. So we have to go out and check periodically and make sure that you're only storing what you said you need to store in it, etc. Another thing that you'll need to secure for this is insurance for the crops that are being stored. And you all are likely eligible for the non-insured crop disaster assistance program through FSA, which is a type of insurance. And it's for specialty crops that don't have a lot of other options through regular crop insurance. So I can help you through that. It does require some record keeping, but there are plenty of resources that I can point you to here at MU to help you with your record keeping if that were an issue. Essentially, you have to keep record of how much you plant, where you plant it, and then how much you harvest as well. So yes, I think that's about everything. I do want to emphasize that if you're interested in a farm storage facility loan, before you do any type of work on installing a facility or you're buying equipment, talk to me first, because there is an environmental review that has to be conducted before any work is conducted to install equipment or storage facility. So yes, that is a farm storage facility loan. Does anyone have any questions?
Heather, while we're waiting for people, let's give everyone a chance to think of a question or two, perhaps. I was wondering if you could take a step back to something Kallie mentioned in her presentation, the idea of an FSA farm number and what that is and how producers get one, and does it cost anything, and what happens if I suddenly sign my farm up to get a farm number?
Sure, yeah. So your farm number is the first step to establishing records with the USDA. You'll come to me if you're in the St. Louis City region, or you can come to me if you're anywhere. I can point you to the right direction and get you into the system, whatnot. But you'll go to a program technician for the FSA, fill out a customer data worksheet, which just gives basic information, and then we'll register your farm into USDA system. This is the first step to getting pretty much any assistance through USDA. So for cost share programs, for any financial support in the instance of a natural disaster, it all requires a USDA farm number. Once you get your farm number, unless you opt out, you'll start receiving information about USDA and get our newsletters. And so it's kind of your starting point to working with USDA. And yeah, we encourage people who are interested in the USDA to get a farm number, because it puts you on the map on a federal level. So it proves to the federal government that there are urban farmers and small scale farmers. not just traditional farmers out there, or row crop farmers, I should say.
And you guys offer farm numbers on controlled environment agriculture operations as well as outdoor traditional field production.
Yes, we do offer farm numbers. If you're growing something, you can get a farm number.
Okay, there's two questions in the chat. The first was a question to review the record keeping requirements again.
Yeah, so record keeping is important for any of the loan programs, because you essentially have to be able to prove that you can pay back your loan. So that's part of the financial analysis of securing your loan in the first place. And we'll get into that kind of in more detail whenever MU does their discussion on taxes and record keeping. But it's really important to track your costs and your profits, and just in general. If you want to know more about the record keeping associated with NAP, specifically the insurance program, basically you just have to make sure that you record keep or record what you plant, where you plant it, and then have a way to measure your harvest amount. So whether you have a scale and you like weigh all of your lettuce or all of your watermelons, and then report that as well. Does that answer your question, Jessica? For honey, it's a little bit different. I know you're a honey producer. I've worked with you already too. You've reported your hives with us already. But then, yeah, so if you wanted to get NAP insurance for your honey, you basically have to keep records of how much honey you're harvesting.
And do you see the question, the other question in the chat?
Okay, and then the next question is, yeah. If I'm buying equipment rather than building storage, do you still need to do an environmental review before I buy the item? Are there any costs to applying for the FSFL? Yes, we always do an environmental review. If you are buying equipment and it's not necessarily a building, the environmental review is much more simple, but it still requires a review, because essentially if you get federal dollars to pay for something, they have to make sure that these federal dollars aren't going to something that might impact conservation efforts or disturb endangered species, or cause a noise violation. So there's always an environmental review. It's just a lot more simple when there's not an actual structure being built. And yes, there is a small cost to apply for an FSFL, and it's associated with the environmental review. After you decide whether or not you want to take out an FSFL loan, you would put a $100 non-refundable payment down, and that is just so that we can do the environmental review, essentially. And then there's a down payment depending, the down payment is dependent on how much your loan is. Before we move on to MU Extension's presentation, I want to kind of pass the baton over to NRCS, and for them to give a little spiel on their cost share program.
I wanted to introduce myself. My name is Szachnieski, and I'm the urban conservationist out of the St. Louis Urban Hub office. I have a counterpart, Elisa Moss, who is also out of the Urban Hub office, and we are in the process of working with producers in the Urban Hub area. Just to define the boundaries of that area, it is 270 south, heading north to Highway 70, all the 70 west, and then all of North St. Louis County. So that encompasses our Urban Hub space. The programs that we are able to offer, there's two. One is called EQIP, Environmental Quality Incentive Program. The second is called CSP, Conservation Stewardship Program. Both of those provide technical assistance. They also provide financial dollars. The financial dollars through EQIP, Environmental Quality Incentive Program, is more like a cost share. So if there's practices that you're interested in implementing on your operation, we can take a look at your operation in a field visit with you and help you to be able to apply practices that will help you address your resource concerns on your ground. Conservation and Stewardship Program is a program where if you have addressed a good majority of your resource concerns, but you want to be able to go above and beyond, you can install what we call enhancements as well as practices on your ground. And there is an annual payment for that program in addition to the financial dollars tied to installing the practices and the enhancements. And I will put in the chat box the contact information for myself as well as Elisa.
Hello, I'm Melissa Marks, and we have a family farm just outside of Warrenton, Missouri, a little bit about an hour west of St. Louis. And we were able to utilize the farm storage facility loan program this past year. And so I just wanted to share a little bit about our experience with it. So just a little bit about us. Our signature product is lettuce mix, and we also do microgreens. We also have fruit, vegetables, other lettuce varieties, and everything that we grow needs to be refrigerated. And so over the course of the last several years, we've been increasing our production and then also needing to increase our space. We had 2 triple bay refrigerators, commercial size, 1 commercial double bay refrigerator. And we realized that last year early on that we weren't going to have enough space to keep all of our produce between harvest and market. So our primary outlet is to sell at the Lake St. Louis Farmers Market. And so basically my husband, Andrew, called the Warren County FSA USDA office and just started talking to them about what kind of farm loans were available to us and what would be a good suggestion, what direction to move. So the farm storage facility loan was the one that they suggested to us. We got connected with Marine, and Andrew and her discussed a lot of information over the phone. And then we started emailing towards the end of April. And Andrew and I decided that what we wanted to end up doing was get a walk-in cooler, specifically this CoolBot kit. So this CoolBot, this walk-in cooler came in a kit that we were able to order through Store It Cold LLC, and it came with an outdoor option. So it allowed us to be able to not have to have a pole barn or a big enough garage or a big enough indoor space to like put it in with that little topping over top of the roof, basically. It gave it extra protection from elements being outside. Along with it though, we obviously had to put it on a good structure underneath. So we had to have a concrete pad poured. And then of course it keeps things cooled. So it needed to have electricity ability to be hooked up and everything. And so we followed up with Marine, and she just confirmed that we would be eligible to use this, or that basically what we wanted to use this loan for fell under the eligibility guidelines. So once we knew that that's what we were doing, they started telling us what kind of stuff we needed. And so this was all the documentation that I gathered over the course of the next several weeks. We needed a project estimate, so like a quote from the actual company that we got the CoolBot from, which we were able to get via email. We also got a quote from the concrete guy, and my husband was in a position that he was able to do the electric, but if we didn't, then we would have also had to have a quote for the electrician to be able to hook it all up. And basically we submitted all of that, and we had to turn in a projected production to verify that we actually needed that increased space. And then we are LLC, so we did need to verify that our operating agreement would be okay with us incurring debt. And then the loan application itself needed to be submitted. And this is where I put in that $100 non-refundable deposit that she was talking about that actually goes towards that environmental site inspection. So in addition to that information, we also need to submit our financials for the, like specifically our 2 most recent year of tax filings, both for our LLC and our members. So myself and my husband's personal information, the last 2 years. We also need to submit a balance sheet that was less than 90 days old and a projected income and expense report for the current year. And then in addition to that, we also submitted the aerial pictures of where the project was going to be located at. And then they did an actual environmental review site as well. So these are the pictures that we sent in. My son has a little drone that had camera capabilities. So my husband snapped these shots. And then this one's just from Google. But all of our produce that we grow is on this side of our house, and our seed start nursery area is down on the other side, opposite side of the house. It was really easy to access the electrical box for everything to be hooked up by their house, and so that's where we ended up going with our location. So once all of the paperwork was compiled and approved, we officially signed everything. We couldn't actually start the project or purchase any items until the loan was approved. And so that process for us took a little bit longer than what it probably would typically, just because it took me a while to get the paperwork together. But April 27th was whenever we first started that email communication. And then we were officially approved on June 2nd. And again, it was just took me a little bit to compile all of that information and the documents that they needed. So once we were approved, we called the concrete guy, and of course he was several weeks out, so we had to wait for him to fit us into his schedule. But once he did, he came over, leveled out the space where the concrete was going to be poured, brought in some rock, and then of course the concrete there that you can see. We wanted to make sure we had a big enough concrete space to be able to walk around the cool bot itself. And so that's why and the concrete guy also suggested it being connected to our existing like foundation and concrete lines that we had next to the house. And then also, so once the concrete was done and cured, then we had that cool bot, we had it ordered. And so it just was sitting there on a pallet waiting for us to put together. This unit was just really neat because it just basically came in walls and pieces that we just pieced together. My husband and my son put it together in about a day's time. And so it's been really cool. In the back here, this is where the electrical hookups are. They're by the house. And you can see this unit, we have a 10 by 12 that's 8 foot tall, and it takes 2 air conditioners. Some smaller ones only run on 1, but with the size that we have, it takes 2. And this picture here on the far right is actually from the inside, what that all looks like. And this all came, like the air conditioners came as part of the kit. These little gadgets, the smaller gadgets are the actual CoolBot fixture that comes with the kit as well. We just had some extra expenses like in the electrical wiring and stuff like that, but all that was also covered with the loan. So once we were approved, we got all that stuff ordered and put together. We also, once we need to provide proof of payment. And so everything needed to be paid for. And then those sources like the concrete guy and the Store It Cold, where we bought the kit from, they each need to sign a CCC 191 form, which the office supplied for us, just saying basically that everything was paid for in full and that we had ownership of it, that we did not owe them anything. And then in for the electrical costs, like the wiring and stuff like that, that we had some extra things, we just had to submit receipts. And then actually a canceled check for our concrete, we paid with a check, and we had to have a canceled check just to prove that that was all paid. And then they came and did a site inspection after all that was finished. And then we had to prove that we had the insurance. And once that insurance was all finalized, then everything was prepared and we signed it. And that money was deposited into our account, I want to say the next day, but within at least the next couple of days. So really, it was a pretty quick process that could have been a lot quicker. We started that initial conversation in April, and June, we were officially approved. Again, that could have been shortened up just by turning in paperwork a little quicker. September was whenever the construction was all completed. And again, that kind of got a late start just because our concrete guy was backed up by several weeks. And then November, we had the insurance was officially finalized, and that process could have been a lot quicker too. We just, after everything was finished in September and we went to get that insurance on it, we realized that our insurance company really wasn't the best company to be working with. They didn't quite understand what all we needed. And so then we switched insurance companies, and then it just, all the paperwork for the switch and everything just took a little bit longer. So it was officially like December 2nd, I think, was whenever we officially had the loan closing and the money was received. Just overall, it was a wonderful experience, but if anything were negative, it would be just that upfront payment. We didn't realize until we didn't realize we needed to actually submit the paid receipts before receiving the money until we went to sign that loan application at the last minute, right? Like after all the other paperwork was kind of turned in and stuff, which was probably a miscommunication on our part because my husband did a lot of the phone conversation. I did a lot of the email conversation. So some information could have just slid through the cracks and we just missed. But it all worked out. We got it all worked out. There was some mention that if we needed to, we could have potentially worked with like the biggest cost of our loan was the actual kit itself from Coolbat, from the Historic Cold Company. And there are several companies that is used to working with the type of loan that we got, that you can sometimes submit like a signed form saying, hey, I'm going to be receiving money for this loan, and they'll like work with you on that. So there's definitely a possibility that you may not need to have everything paid up all front. Definitely work out those details with your FSA contact, so that you don't eliminate yourself from the possibility until it's all been discussed. But just a lot of paperwork. I mentioned earlier, the first time this was the first loan that I have applied for since we first bought our house 20 years ago. So it was something that I just wasn't used to putting together. Our positives of our experience, just the communication was amazing. I encourage you just to get connected with whatever local office that you are working with. There's a lot more information that you're probably not even aware of. Like you said, you might not know the questions to ask, but just starting conversations can often lead to so much more. But Maureen and Jesse were great to work with out of our local office. And really, after all that initial paperwork was submitted, everything went really smooth. Now that we've been through it once, if we were to do it again, I would have a better understanding of all the documentation and all that paperwork. So it'd be a little less overwhelming and I could gather it quicker. And then also just being prepared financially to cover that expense up front, or work out those details of what it's going to look like if we're going to if that's not going to be required. Overall, it's been a total blessing to our business. We have so much more space. We have better access. It's a smoother process. Everything that we do now with all of our products now in one place instead of multiple different refrigerators and a couple different locations on the farm. It's a lot easier whenever we're washing and packing our produce, and especially whenever we're loading up for market as well. We also got a lot of time back because while we were in the process of getting this all set up and ready to use, we did extend our space, and I was driving to a neighbor farm 25 minutes away 3 to 4 times a week just to use their walk-in cooler. So a little bit of rental fees and just the travel there was easily an hour a day, or an hour trip, sometimes more than once a day. So that has been huge, being able to have that right there on our farm. And then also just the more control of the product environment. You know, we know exactly what temperature our walk-in cooler is set at, and we can go check on it anytime. So these are just some pictures. These are the totes and bins that we use to gather our produce and bring it to market. This is a full walk-in cooler with all the produce getting ready to take it to market. And then this is just some of the stuff out of the bags or out of the totes and ready for display. And that's all I have to share with you today.
And my name is Ryan Milhollin. I'm with University of Missouri Extension. I work kind of as an ag business specialist in Columbia, Missouri. But the next thing I'm going to start talking to you a little bit about, and I'm going to work on getting my PowerPoint shared here and going, is myself and also Manita. We'll be talking to you about kind of farm taxes and record keeping. So let me hit one more button. Start the slideshow now. Okay. So given that we're in tax season and taxes are upon us, we thought this might be a good kind of opportunity to talk to folks that maybe they are having to get ready for filling out their farm taxes this spring, or if it's folks that maybe not necessarily have ever or maybe just starting to farm, kind of understand the basics of farm taxes and what goes into it. So we're going to kind of walk through some things to kind of hopefully get everybody up to speed and everybody kind of thinking about, how this applies to my farm or my potential operation. So to kind of start off, give you kind of a, where do we start? What do we want you to get out of this? We really want you to kind of identify and understand kind of the income side of it and also the expense side of what's in the Schedule F tax form. So when you're filling out your tax information. And then the second step that Manita is going to talk about is, kind of some tips and what are some of the importance of farm record keeping systems. And also as we go along to kind of make this a little bit interactive, we're going to try to ask some questions just as we go along. So this is kind of the first question I think Mallory put in here. Question one is when you think about doing your tax paperwork, what comes to mind? What are some potential thoughts you think? So if you have a chance to kind of enter that into the poll, and I'll just be kind of curious to see what everybody's thinking about. Maybe a lot of you are going to put that I love doing taxes. It's my favorite thing that I've ever done or I ever have to deal with. Maybe that's what people might put in there as well. So we got one response, two response, and don't be bashful. There's no pass or fail for any of this information, but it's just kind of a fun thing for people to think about. Okay, well, I'm going to go ahead and I want to make sure to keep us on time here as well, but I'm going to go ahead and share the share results. I think. Trying to see how to share. So. Oh, well, I'm trying to figure out how to share the poll with everybody so they can see it. Maybe I had to stop share, but.
Well, I tried to. It looks like we've got long days in front of the computer when I'd rather be working outside.
Okay.
Write-offs, expenses, math, forms, and extreme anxiety /
Oh, that's great. Well, that's kind of what I was thinking. So Mallory might have to help us with some of the poll stuff, and if we're not able to showcase it because we're in two different places. Although it says now I can share it, so maybe I hit the button now. Okay. Well, I'm gonna keep us on time and keep us going for the next bit. So. So I start this off with a disclosure that the first thing is I'm a University of Missouri employee, and this is all for educational purposes. We do this because a lot of times, especially kind of in the ag business area, we tend to talk about a lot of legal, accounting, tax information. So I just want to make sure that everybody understands that I am not a professional in this area, but I do help educate in this area, and that you should always look to experts and legal advice from others that are professionals. But my job is kind of help you kind of understand some of the key things. So as you engage with some of these different people, and that you'll be better prepared to talk with them. So, but just want to kind of put that out up front. So we kind of want to switch gears here and kind of talk a little bit about, what's in the tax form. So a lot of times people are kind of familiar with when we start talking about the 1040 tax form that you may have had to done, as an individual, or maybe you have to do with your business. It's like, how does all these pieces kind of fit together in the mix? So, kind of on the top side of this graph, we've got the, W-2 income. So if you've got a job somewhere and you get a W-2 from your job, that information, fits right into your 1040 tax form. So that's one component of it. If we go kind of down to the bottom left there, we have what's called the Schedule F. And that's what we're going to kind of talk a little bit more about today is, farming activities and how that fits into your tax return. So that's what the Schedule F is really focused on is the farming side of things, and where you'll put your income expenses for your farming enterprise into that schedule. Sometimes there's things that from the farming enterprise that might turn into things in the Schedule C. So maybe you take some of your produce or products and make different types of manufactured products. So Schedule C kind of fits into a place where people can kind of put their business related income expenses, things that aren't necessarily farming, but kind of fit into another type of small business area of the tax return. Sometimes there's things that go into kind of the green cloud there, Schedule E. This could be like a lot of times farm rental payments and things. So maybe you rent out some of your farmland to somebody else, or maybe you get, or vice versa. Those kind of things kind of fit into the Schedule E. Schedule A is kind of go when people do itemized deductions. Maybe not as much anymore because since the standard deduction is a lot higher, but sometimes people do itemize their deductions in their tax return. But just want to kind of give people a sense of, these are the different kind of areas in a tax return. And today we're going to kind of focus on more on just the farming side of it, what goes into the Schedule F. So a lot of times, and I think I talked a little bit about this on the slide before, but, somebody that's very diversified in farming, how does things fit in? Generally when we talk about like what are farming activities, we tend to refer things that means you're growing and selling products in kind of what we call an unmanufactured state. So if you kind of look here on the bottom side or the left-hand side of this table here, for things that might fit, better into a Schedule F for farming activities, growing fruits and vegetables, but not processing them at all. So maybe you're selling them at a local farmer's market or selling them to a grocery store or some other retailer out there as well. Same thing with like honey, mushrooms, tree nuts, selling plants to other, those would all be considered farming activities. Things that might fit, on the Schedule C side of your tax return, maybe things what they call as non-farming activities. Maybe you're taking some of your tomatoes and you're making salsa. Maybe you're doing baked goods. Maybe you're making things like apple cider pickles. Maybe you're taking some of your produce and actually preparing it or cutting it in some way. Those kind of things tend to go on the Schedule C side of the tax return as well. We also get a lot of questions about agritourism. Maybe you have a pumpkin patch, and maybe you're charging a fee to people and you're bringing that income. Those things don't necessarily are considered farming activities, at least in the IRS world. So those things will probably fit under the Schedule C side of it. But just want to kind of explain that it's not always cut and dry. Sometimes there's a gray area between what goes to Schedule C and Schedule F. And sometimes you just need to talk to an accountant or somebody that's well versed in understanding income taxes to figure out for your situation. Just want to give everybody a sense of, what the Schedule F actually looks like, the actual IRS form. I think you may have gotten a copy before this webinar today of some exercises and examples. So you'll see a blank Schedule F in there as well. You can go to the IRS website and search for it and pull a copy of it. But this is actually what it actually looks like. So basically a 2-page document that you go through and put individual information about your operation and what types of products do you produce, what kind of income do you have from the farm, also what kind of expenses from the farm and else. And I'll kind of walk through a little bit more in some of the other slides too. We'll kind of break down the Schedule F a little bit to make it a little bit more digestible than looking at this big form here. But if you kind of zoom in to kind of the top of it, of the Schedule F, really kind of starting out the basic things. It's putting your basic, information about your name or potential social security number. If your business has a certain type of EIN number, you'd enter that information into as well. Sometimes the first thing is actually just putting on there of what your principal crop or activity is from farming. And for some, that's really easy. Maybe you just grow fruits and that's all you do. And maybe that's really easy to figure out. But for some others that may be very diversified, what we encourage people is just trying to figure out what the major or the biggest thing from a sales standpoint of, what's bringing in the bulk of your income to kind of help you figure out what to identify as your principal crop and activity. On the bottom side of the slide, you can kind of see the different codes, for crop production, animal production, also forestry and logging. That helps you identify like what the code you put in on that box B on your income tax form right there. So basically it's just some very general things in there as well. I think Mallory just put in a question in here to show, we just wanted to kind of ask the question to everybody in here. If you had to pick one box in here of, what NIAX code do you think best describes your farming operation? It'd be kind of interesting to hear from the folks on this webinar of what people are into. Keep in mind, it's not always clear cut and there's going to be some variation here as well, but it looks like we've got a couple vegetable and melon farming as kind of being one of their primary activities. We've also got one in the greenhouse nursery and floriculture space, and then also one other crop farming, which tends to capture anything that's not in those other, kind of 4 buckets there too. So, but yeah, it's just kind of interesting to see what people are in, and there's no right or wrong answer. It's just trying to pick out what's the principal one is.
Brian, there are a couple of questions in the chat.
Okay.
One pays me to keep their hives, and I think we're going to get to this soon when we talk about different income for the farm.
Okay, let me see if I can get my chat box up here open. Where is the chat? Oh, there it is. So farming services for others. That could be, for example, maybe you are doing custom farming for somebody else. So maybe you're going to go in and till their land for them, and they're going to pay you for that service. So it could be hiring somebody else to do work. So maybe somebody's going to somebody to pay me to keep their hives. Yeah, exactly. So basically it's just a fee base for something. Sometimes we can call that, like custom hire. You're custom hiring somebody for doing that one way or the other. So, but good question. And kind of give you a little closer snapshot of what the Schedule F income looks like. And I'll talk a little bit more in depth on this on the next slide, a little bit about what are some of the big buckets in here, but these are all the questions that it'll ask you, basically 9 different ones that kind of pop into the farm income on the cash method. And I'll probably take a step back here.
Is that on Schedule C or Schedule F?
Okay. So for hives, that question, that's probably going to be, for keeping hives and for honey production, I think that's probably going to fit more into the Schedule C side of things. So, really, unless they're doing a lot of, if they're paying you to kind of maintain that, because that's a farming activity, essentially to keep to keep your bees and to keep honey production going, that's probably either going to fit on the income side of it or Schedule F. So that's a good question, Jessica. And while we're back on this slide, there's one thing I didn't explain, and I realized it on the next slide, but there's a box C on here called accounting method. And it's one thing you elect on your Schedule F. You basically pick either accounting on a cash basis or an accrual basis. And cash basis means like as income comes in during the calendar year, the income comes in, the expenses come in, it's for when it actually happens. So when the transaction happens. So if you're doing cash-based accounting, which a lot of farmers are, But there's also some that do accrual. So, people that may produce a crop, this would account for the planting, the expenses and the potential income of it on an accrual basis within when it actually happens. So, so that's one box that sometimes people have to understand what cash-based accounting is versus accrual-based accounting as well. So that's one box that I didn't discuss that I should have earlier. Now, as we go into to kind of the cash method. So if you see that part 1 where it says farm income cash method. So these are the people that will put their information in here for the cash-based accounting. There's also another box for accrual. That's also on the Schedule F, but we're going to probably mostly talk about the cash method. But so basically any kind of sales that come in for livestock, produce, other things for the farming enterprises are either going to be on box 1 or 2. Sometimes there's other payments come in. These may be government payments. These may be disaster payments. Maybe you're a member of a cooperative. If those kind of incomes come in, those get reported on a Schedule F. Also, if you see the box 7, custom hire income. So maybe somebody's hiring you to do something for them. Kind of like the beekeeping. If somebody was hiring you to maintain their hives for them and paying you so much money, that would show up in box 7. And sometimes there's other income that's related to the farming enterprise as well. But this just kind of shows what the actual form looks like. But to kind of talk a little bit more of a breakdown here too, is there's 2 different boxes up there, and you probably saw the word purchased versus raised. There are some situations that people may buy something and turn around and resell it later on, still farming. Maybe they bought some little, calves, and then they turn around and sold those calves at a later stage when they're a little bit older. Or maybe they were buying plants and then growing them to a certain stage and then selling them later. So that's what it means by purchase. That if you actually purchase livestock or produce or plants or something, that would be the sales of it. Now, on the vice versa, the sales of raised livestock, produce, grains, or other products, meaning that you raised it from the start. You never purchased, anything from somebody else. Maybe you, planted your own seeds, grew your own crop. That's the only distinction between those 2 different lines in the Schedule F. Basically any kind of ag program, crop insurance, disaster payments get reported on Schedule F, that custom hire and other income. So just want to make sure everybody kind of understands what goes on the income side of the Schedule F. The expense side, and this is one that I think people understand income a lot more, but I think sometimes in farming, it's not always easy to understand exactly what all expenses people can deduct on a farm. But this is a snapshot of what the part 2 of the income tax return looks like. So all the different boxes. So from box 10 all the way through 32 of all the different expenses. And we'll walk through some of these and try to give some examples to people, because sometimes it's easier to see an example and understand how it would apply in here. But the one thing before I flip to the next slide, I want people to recognize is that sometimes there's farming costs, for ordinarily, doing business in farming that don't always fit into one of these categories. A lot of times farms that I work with and others work with, there's also box 32 that have other expenses that don't quite fit into something, maybe in one of these other categories. And kind of the exercise example that I think will be emailed out to you, I think was already emailed out to you. We had like a farmer's market booth expense. That's something that might fit into 32, something that doesn't fit in maybe one of the other categories, but is a real cost related to farming as well. But just want everybody to kind of see the income tax form and kind of see what some of the different categories look like. And we'll kind of walk through some examples of some of these as well. Car and truck expenses. A lot of times we spend a lot of time trying to educate farmers about, maybe keeping a mileage log. Maybe you're using a personal vehicle. Maybe you're traveling to a farmer's market. Maybe you're traveling to pick up production supplies for your business, or maybe you're just traveling from your home to a farming location where you're farming at. Those are all deductible expenses on your income taxes, and it's just keeping track of mileage. And the IRS will actually have a rate that you can help offset some of your expense categories for any kind of car and truck expenses related to the farming activity. So like I said, keeping a mileage log that will definitely help in that category of keeping track of those expenses. Chemicals, this could be anything from, from fungicide, insecticide, herbicide, any kind of chemical related to the farming practices that you're doing. Maybe it's a miticide for like beekeeping or something as well. So those are all deductible expenses. Conservation expenses, maybe you had to put in some dollars or into the farming enterprise to help with improving some of the conservation expenses and keeping track of those expenses and putting those into your income tax return. Custom hire, maybe you have to hire somebody to do something. Maybe you have to hire, electrician to come in and wire up a greenhouse, or maybe you have to get some specialized expertise in to help on the operation to do some things. Keeping track of those expenses and recording those into your Schedule F, they're definitely expenses that you can deduct. Depreciation is a big one. And there's lots of different methods that the IRS has for depreciation. So when I mean depreciation, it means that you have some sort of asset for the business that, has a lifespan longer than 1 year. So think in terms of equipment, think in terms of greenhouses, things that are assets that may have a lifespan over multiple years. Well, the IRS allows you to elect, have depreciation on your income tax returns and write off those expenses as depreciation expenses. So let's just say you had a greenhouse and, you were allowed to elect it over a 10-year period and you spent, $10,000 on that greenhouse or whatever. They're going to allow you to take a per year depreciation charge over the next 10 years on your tax returns and write that off. And there's lots of different ways and methods for depreciation, and we're not going to go into details, but as you talk to the accountant, making sure that they understand what assets you have for the business, they can help you figure out what depreciation to elect. Feeds, fertilizers, limes, these are all definitely things that can be put into your tax returns as expenses. If you're spending any dollars related to any kind of gas, fuel, oil, keeping track of those in your farm record keeping system, those are definitely expenses. Insurance, maybe you have business insurance, maybe you have, property insurance, any kind of insurance related to the business itself. In some cases, if you get large enough and maybe you want to offer health insurance, things like that, those are things that can be written into your IRS expenses as well. Interest, we heard a lot of talk about some of the different FSA programs on farm loans or other kind of commercial bank loans out there. So if you do have a loan against your farm or some of the information or some of the pieces of equipment on your farm, that interest is deductible on your income tax returns. Hired labor, so if you hire people to work on your operation, maybe part-time or full-time, those all fit in. If you have any kind of rents or leases, maybe you have to rent a facility to have your farming enterprise. Maybe it's controlled environment ag. Those costs for any kind of rent or lease are deductible as well. And also any kind of repairs or maintenance. Those all kind of fit in the bucket of what can be put on a Schedule F and be written off as an expense. Kind of on the last set of expenses here that kind of fall in the Schedule F, seeds and plants. So those all definitely fit in. Any kind of farming supplies related to the farming enterprise that you're buying and keeping track of, those fit in. Taxes, these could be any kind of business taxes that come into play that related to your business. Those are things that come into the Schedule F. Utilities, so if you're able to separate kind of your personal utilities from your business utilities, anything related to water, electricity, other utilities related to the business enterprise, those all fit in. If you have animals, if you have to hire a veterinarian, if you have them help with the animals that you have, medicine, if you're having them doing any specialized services, those things fit into a Schedule F and our expenses. And then last is kind of the other expenses. And I would tell people, just keep in mind that, it could be a subscription to a farming publication that helps keep you up to speed on technology or horticulture. There's lots of different things that you just have to think about it. Did this help me, kind of doing my business in farming? And if there's ever a question, asking an accountant or a tax professional too, this will qualify. But oftentimes we feel like there's lots of things I think people leave on the table and don't realize that are deductible expenses on their tax return. So I think we've got a next poll question. Here's question 3. We'd like to ask everybody, what are kind of the 3 biggest expenses that you have either currently in your farming operation, or do you think you'll have in your farming enterprise? So just want to kind of see what are the big ones that really kind of jump out to people that, that think they'll have or potentially will have. And I'll give you all, maybe here about a minute to kind of think about that, but it's kind of help people thinking about it too. And kind of in our world of kind of the ag business world, we also often tell people, there's lots of expenses you can focus on your farming enterprise, but the big ones are the ones that you really definitely want to make sure you keep an eye on. And cost containment, keeping an eye on those from year to year, see how they change, how do they fluctuate? What are the big expenses that, could hurt the business a lot. So we always tell people to really pay attention to those closely, to make sure you kind of be profitable. So it looks like we're getting lots of good feedback in there. Car and truck expenses, depreciation, and I would definitely say depreciation is a big one. And honestly, from from a taxation standpoint, depreciation really minimizes a lot of people's tax liability a lot in agriculture. It's one of the nice benefits that farming does have to allow farm depreciation to be accounted for. Okay, I've got one more slide and then I'm going to pass off to Manita. But one of the things I just want to kind of recap, and I know it's an online webinar, it's kind of hard to do an in-class exercise too, but hopefully you all get a chance from the email that exercise. If you have a time, just take a chance or take a try at it and see what you can do as far as the class exercise, trying to fill out the Schedule F, and then there's also a copy of the answers there too. But I think it's one of those things where people get familiar with the Schedule F, then they know what to kind of look for future years. So why is Schedule F important? Why do we spend this time talking about it? And probably the biggest one to start off with is making sure everybody gets the benefit, deductions, credits to minimize their tax liability. Make sure that they're not leaving something on the table that they're forgetting about that should have been included on their tax return when they're trying to figure out how much tax that they're going to owe for their business or themselves personally too. So keep in mind that all kind of flows into the same, depending on if they're a business or a corporation, which will be a little bit different. But also want to stress that farming has a lot of tax advantages that other businesses don't get. There's things like sales tax exemptions, the depreciation advantages that you're able to use that on your income taxes to minimize those things. And also I think just having a really large pool of deductible expenses for farming. Keep those all in mind. Try to understand which ones may fit into your situation. The last thing, and this kind of ties back to what a lot of our FSA folks have kind of talked about too, is tax returns really help kind of document financial performance and farming activities. A lot of times when I work with producers, it's easy to kind of go through the tax returns and see trends and see what does it look like over multiple years, and try to make adjustments in future years if they're wanting to try to make some improvements, or you can kind of understand, I want to make a change, how is it going to impact me? It also helps kind of document and helps qualify you for government programs. Having that, that track record of Schedule F history, it kind of helps you build credit in the farming world. It can also help when, if you go to lenders and ask for a loan, those are kind of things that they're going to be asking for, that maybe you're ready to scale up your farming business at that point. And also, I think it also helps people understand your kind of farm's profitability. You can take the pieces of the Schedule F out, from your farm record keeping systems and kind of look at, what's the overall farm's profitability, and then kind of understand from a year-to-year basis and either keep things going or make some changes in future years. So.
Okay, hi everyone. I'm Manita Ale. I am your ag business specialist at St. Louis region. I'm with M Extension. So today I'm going to talk about farm record keeping. You have heard Kelly, Heather, Ryan talking about record keeping. You need to keep record, you need to keep record. So what is farm record keeping? So by the name itself, we can guess that record keeping is the process of keeping record of your farm level activities or farm level transaction. For example, you are planning to plant tomato next week, for example, you will buy seeds this week or today you bought seeds, right? Then you will have date of when you bought seeds. You'll write date February 22nd, 2024. I bought seeds of, I don't know, cherry tomatoes, maybe from Walmart or Amazon, whatever you prefer. And you'll also write quantity of how much seeds you purchased and what was the price of that seeds. So that's how you keep a record from farm level sites. And you keep writing about this, all the activities you do in farm. It may be buying fertilizer or other stuff. And Callie, I don't know, oh, not Callie, Heather mentioned about harvesting record. You can also keep record of harvesting amount. For example, you harvested tomatoes after 4 months, then you will write, okay, date of the harvesting and how much you harvested. Maybe you harvested 100 pounds one day, 50 pounds next day. You will keep record of those weight, how much you harvested. You'll keep record of them, and you also keep record of sales. So you sold that whatever you harvested that day, you sold to farmers market. It may be 2 different farmers markets. So you will keep record of those sales also. Once you sold 100 pounds in Tower Grove farmers market, for example, but next week you sold 50 pounds of tomatoes in Lake St. Louis farmers market, then you will keep a record of those activities you did in farm level. So I hope that's clear. Usually keeping farm record is not the favorite task of most of the farmers, but it is important to understand your cost of production, revenue, and analyze the profit from your production, right? So what are the options of keeping records? You can keep record manually by paper-based record book. This is one of the option of keeping record. I just saw this paper-based book because it is available at my office. I'll put the location of my office. So you are interested in doing manual paper-based record bookkeeping, then you can come here and I will just give you this book.
We're curious to know what the record keeping practices are of the producers who are with us today. Do you use a manual paper-based spreadsheet farm accounting software, or do you not have a record keeping system in place?
Looks like everyone here keeps record. That's good. Good habit to put. Okay, I'm ending this poll. Oh yeah, I just mentioned about manual record keeping system, and there is another system called, you can use Excel spreadsheets or Google Sheets to develop your own template. You can also use already existing spreadsheet sheets. For example, M Extension also has these Excel spreadsheets where you can record your farm level activities. You can also record your farm level activities through accounting software. Melissa in chat, I saw that Melissa mentioned she is using QuickBooks. Like that, you can also use Quickens or PC Mars. If you want to learn more about this accounting system, you can go to this link that we have put here. All of these options have their own advantages and disadvantages, right? So when you talk about manual or Excel, then you have easy access to this. Or it's not expensive, but it might be time consuming. Likewise, farm accounting software, it might have time efficiency. It might help you to generate reports easily, but it might be expensive. So all of them have pros and cons based on what you want, what you need. You can choose one of the system. So main thing is you need to have a system, either it's manual or Excel or accounting software you are using. You just need to have a system because we want to keep those records regularly on the regular basis. So that system helps for that, right? And another thing we want to share with you that is better to keep your business bank account separate from personal bank account. Having said that, it will help you to navigate your expenses through business and through personal expenses. So you do not want to mix them. And these record systems should include section for farm income and expenses, for example, that I already gave you in the beginning, capital purchases and sales, personal income and expenses. So you can have separate from the business. Okay, what is the importance of record keeping? In addition to all those importance of filling Schedule F or applying for non-insured assistance program or whatever they mention, I would just want to add that it also helps you to estimate the price of the product. Once you have the cost of production, revenues, and you can just estimate the price based on what you have in your data. It also helps you to project your financial status of the business. From cash flow statement, you'll have your income and expenses. Based on that, you can project your financial status of your business. It helps to plan your business by analyzing cost benefit and understand if your business is profitable or not, the product you are producing is profitable or not. So those are the importance of record keeping. This is just a tips that tax planning is important. You need to have connection or you need to have network with good tax preparer, which is familiar with your farming system or farming transactions, and share with them your records and be familiar with tax rules and start early. Don't wait for the end of the year. So the earlier the better. We also have this farmers tax guide, and you can have this. If you are interested in this, then you can come to my office, which I shared my location there, and get this. In addition to farmers tax guide, you can also learn about farm tax resources, farm tax through rural tax education that Utah State have. And lastly, we encourage you to go through this IRS website to understand and to learn about the instructions for Schedule F. Thank you. And any questions?